Let's talk about Airbnb quickly because I have been talking too much and let us run on a little bit late. Airbnb's Q3 numbers were reported by the Wall Street Journal. 1.65 billion in revenue, up about 400 million from the year ago quarter, growth about 30%, and critically a net profit of $266 million. Pretty good. However, not enough to alleviate the company's Q1, Q2 net losses. So the firm ended up negative 322 million for Q1s through 3, a change from being plus 200 million a year ago. The narrative is what we all know, rising sales and marketing costs, some rising security costs, which probably impacts cost of revenue or COGS, lowering their gross margins, and slowing growth rates. And when you're going public, you don't really want to have that confluence of events. And I've seen all sorts of theories, people saying they're juicing S&M spend to drive revenue growth ahead of an IPO to get a better multiple or whatever. Danny and I were talking about this before, and our takeaway was kind of, how do you value this thing? Because they're a bit darned if they do, darned if they don't. If they don't spend on S&M, they won't grow as fast, they won't be as attractive. But if they do, they're less profitable and they're less attractive. So I don't know, Danny. When this goes public this year, do you think it's going to be a surprisingly positive event or kind of a meh direct listing?
I think it's really up to a question of whether they're going to go public at all. They've said very aggressively that they intend to go public. They've kind of said this over and over and over again. It's going to happen. It's going to happen. But Bill Gurley had a great point on Twitter, I think, in the last couple of days, which was people talk about these open windows on the market. You want to come when everything's auspicious, everything's lined up. And you have coronavirus going on, which not only affects kind of the global macro issue, it also affects a lot of Chinese money, but it also affects particularly this business, which is Airbnb has a huge China business, both for people going to China and for Chinese people going overseas to Europe, to the United States, elsewhere. And that's being slammed pretty hard right now with the quarantines in place. And so, that might be a multi-month delay right there, right? Just to shore up the numbers and bring everything back to normal. And so what's regrettable here is I think Airbnb had a moment, maybe a year ago when it may have been able to pull this off when the markets were very, very hot, maybe pre-Uber even. But today, God, everything looks terrible. I mean, it's unprofitable. It's losing even more money now than it was before. How do you make that story? I just don't even know.
I mean, it's definitely a valuable company, but I don't know at all how to put a price on it or how I'd even approach that. But it does have a lot of, really good mind share, really good brand equity. And, if you're going to direct list, you're just going to go out there and float. And maybe that can drive a pretty good first couple of months. But I mean, if growth remains slow and the stock is high on a multiple basis, it's not going to be super, super fantastic. But just throwing Danny's point at you, Elliot, if they went public last year, do you think that would have been a smarter move?
I do, actually. So, I mean, when you're preparing for an IPO and thinking about particularly those first 2 quarters after IPO before lockup expires, it's just about the narrative and the trend. And right now the trend is, newer losses have come into the conversation. And do you even have, it probably takes 2 to 2.5 quarters to change that narrative, let alone the trend, right? Because you're spending now or cutting expenses. And depending on the business model, it might take a couple of quarters for the, those changes or decisions to even show up on the bottom line. So they're probably in a tough spot. You can't just turn it over and say, okay, well, now we're going to go back to profitability from a year ago.
Just,
Right, that was just a weird quarter for us. And the other thing that I think is smart for their business long term is they started launching new products, like the experiences around when you stay at an Airbnb property or someone else's really nice home. You can bring in a chef. You can bring in a magician. I don't know if you can actually bring in a magician, but that'd be really cool if you had kids. But as they were wrapping these experiences, I think that was to build a narrative of, we've got this platform that's super profitable and massive, and we're building on new revenue streams. But when you're testing new revenue streams, you need to invest in that, and that takes time, and it takes some money to do that. So I think they're just, to your point, they're in this, it's not even weird, but it's a very interesting inflection point of, we were always known for this thing, and now we've got to bring in new things, probably tamp up growth a little bit. And then the combination of coronavirus and an election year is just really, really challenging. So, it's.
But I also think, in the travel space, we've talked about Oyo Hotels, which is, I believe, also a SoftBank property, but also kind of a very negative story going on in this marketplace. And then we talked about TripAdvisor, I think, shortly, Alex, 2-3 weeks ago, which got slammed on its quarterly earnings because it's really losing out on the Google kind of search traffic. It was down 20% right after its earnings. And so, again, in the travel space, there's just so much competition. There's a lot of challenges. I think Airbnb is a unique property. I think it's actually, as you said, it's a valuable property. It's an extremely strong company, but when there's so many macro factors against you, like that's hard. I mean, it's basically arrows flying at your head as you're trying to run to the public market out front.
Yeah, and speaking about arrows and struggling, I think the Casper IPO is going to cause a bit of a pall on the D2C space. But